Good morning, everyone. Thank you for taking time out of your day to join us as we go through the new AuguStar products. Um, anyway, my name is Paul Williams. I am a life sales support over here at IAMS. And before we jump into this new opportunity with Teresa and Carl with AuguStar, I'd like to share some information with you about IAMS and a quick highlight of why our agents, love working with us and our team over here. And we'll have a few polls during the webinar. And if you have any questions, please do not hesitate to put them in the webinar question box. We will make sure that they are answered today. And the first thing I'd like to highlight about IAMS is our best-in-class customer service. It's our commitment to you and always reaching a live person during our business hours at 1-800-255-5055. And we have to strive to answer all calls within 2 rings to get you to a live person. And here at IAMS, we are a collaborative sales partnership and helping you increase your revenue and utilizing the best-in-class marketing strategies and rewarding our agents is just one of the many ways we add value to your business. And the first thing I'd like to speak about is our new producer bonus program. This program is for newly contracted agents with us, and as you can see, you start off with a $100,000 level with the benefits there, and goes all the way up to $1 million. And within this program, it lasts for the first 180 days of contracting here with us. It's a great way to help build your business, and the incentives that are there. It's just a way of saying thank you, of placing it here with us. And from there, our next slide talks about our Business Builders program. And if you look at it, it goes over our referral producer program. So just like any of you know out there, that some of the best business that we can have comes from referrals, and that goes for us as well. So anytime you refer a new agent over here to us, the way we say thank you for that, as well as that one-time $50 bonus, and anytime this agent writes any business through us, through life insurance or annuities, we do give you some override, and this doesn't affect their premium or commissions at all. This is just another way that we say thank you. And I've personally seen Steve, Charles, and Curtis write many checks to advisors out there. Another way of just, like I said, saying thank you for this and referring this business over here to us. It's a great extra source of income. And moving on from there, I'd just like to talk about our back office support. This is something that we really strive and really makes us shine here. I know we were founded, 36 years ago by Charles, and, that's our commitment to our advisors, making sure that, making sure that we're getting your business in there. We'll go through and scrub your apps and everything, and take a look at all your products, and take a look at all your applications to get them in. And from here, I'll start off with our first polling question. All right, and we'll let that sit there for a minute. Can everybody see that? All right. And our next slide goes over our IAMS website here, and this is a great tool for our producers out there that use this for educational purposes. I know we have many webinars already out there through our YouTube channel, as well as our sales resource library. But anyway, yep, it's great tools that are available to you. You can run illustrations through our website as well. Right. And over to our next slide is going through the Firelight option that we have. It's through the IMS website as well. It is just a single sign-on product where you can go through there and submit applications directly to the carrier, and that would be, through the EIP platform. And this is just some of the carriers that we utilize through this on the life side and the annuity side as well. All right, moving on to our Creative Solutions program here, we do have a full in-house creative team that will help you in your practice. And a lot of our items that we do offer here are turnkey and available for you. We can simply just impose your contact information and your business logos onto this. And kind of speaking of logos, and agency solutions are something that we are very good at, and something that we that if you haven't created a full customized brand, we can do that for you. You can just get in touch with either me or one of our sales directors, and we can get your logo and design imposed on business cards, brochures, and other stationery. And lastly, what everyone is currently looking at is our digital marketing solutions. We can help you, design out a website, social media marketing, email marketing, and more. And to make sure that you are accessible to all your clients out there and just building your brand. In this slide, it's going over our wealth management. We actually brought this to IMS about 4 years ago, and what we've done on this is just been able to grow in this division at IMS very organically. We've helped many advisors become IARs and pass their Series 65 at a very successful rate. And once you've registered for this, we will bring great value to you and your practice, and with an incredible competitive fee structure for both you and your clientele. And we have a great technology and great investment platform for you to be able to use and utilize. And this has been a major sector of growth for us and our business, and just would like to extend that out to you as well. And for our life and annuity academies, we do offer this here at IMS. These are 2-day training events. They are an excellent opportunity for you, the agents, who are looking for, new ways to grow your business and, speak with, other agents out there. IMS is an all expense paid academy for you to attend. And, they'll go over marketing strategies, and it's nice to be able to get face to face with the people that you speak with every day over the phone. We currently don't have any academies coming up for the remainder of this year. I believe we're looking at spring of next year before hosting our other ones. If you have any questions about this, reach out to us. It's 1-800-255-5055 and get with one of the sales directors, and they'll be able to go through some more information on this. All right, and the Seaside Sanctuary is kind of a resort and getaway for our top producers. And as you can see on here, it's an 18-month qualifying period, and the trip dates are, 4/14/24, 4/18/24, and they're going to Kiowa Island resort out there in South Carolina. It's a really beautiful place. I would recommend everybody, trying to get on board with that and qualify. All right, and as always, please like and follow us on Facebook, and you know, and get contacted with us over LinkedIn. I know we're constantly putting out great content for our advisors to use and to review and send out to their clients. And with that, I am going to turn this over to Therese, and she's going to go through AuguStar and their products.
All right. Thanks, Paul. Appreciate that. I just want to make sure we've got a thumbs up that everything's working technology-wise.
We can see the screen.
Absolutely. Great. Awesome. Thanks, Carl. Well, welcome to the AuguStar Life brokerage presentation. We're going to start today with some brief introductions. My name is Therese Rothenberger, and I share the role of Chief Distribution and Sales for the AuguStar Life brokerage channel with my colleague, who you will hear from next, Carl Croonen. I'll just give you a brief introduction and then ask Carl to introduce himself, and we'll dive right in. I've spent my 30-year career in life and annuity sales, working collaboratively with producers on case consultation, analysis, competitive positioning, to ultimately help producers drive revenue to their practice. I cut my teeth as a wholesaler right out of college, and I knew really quickly what a great and noble profession that we are all in, and it is my honor to work in life insurance. Being in the business of helping others with protection and retirement strategies for families, businesses, individuals, etc., it's very fulfilling. And we're very excited about working with AuguStar Life, as well as working in partnership with IAMS as an inaugural partner to sell our indexed life product portfolio. Carl, do you want to introduce yourself?
Sure. Good morning, everybody. I'm Carl Croonen. I've been in the industry now for 34 years. I started as an agent, like those folks who are listening today, and was so successful at that, I eventually moved to the home office, which generally means I wasn't successful. Most truly successful agents stay in the field because they're doing what they love and they're successful at it. And I've been at AuguStar now for 31 years in a variety of different roles, working with all of our product lines, including being in the broker-dealer at one point in time. And today, as Teresa already mentioned, my job is to launch our life insurance product into the brokerage world, and IAMS is one of our first partners, and we've been very appreciative of the support they've given us so far, and I can't wait to tell you more about our product.
Awesome. Thanks, Carl. Well, to begin, we're going to share our story and who we are. Constellation Insurance is a large holding company that is owned by two of the world's largest teachers' pension funds. And they had 4 words for us: grow, organically, and inorganically. And Constellation purchased Ohio National's business infrastructure in March of 2022. And since that time, we have been, as a company, under a massive strategic reorganization and a massive rebranding. September 18th, we officially launched our index life products in the brokerage and IMO space. And AuguStar Life, I like to say, is a 114-year-old startup company fueled with highly competitive index life products and top-tier compensation. So over the past several weeks, we've received many questions asking, where did that name come from? Did you go on AI and figure that out? How did you come up with the name AuguStar? So I wanted to share with you that August refers to something that is dignified, respected, esteemed, and Star honors our partnership with our parent company, Constellation. So those two concepts were brought together to create AuguStar, and that's how we came up with the name. There are 4 separate business companies under the Constellation Insurance umbrella. AuguStar Retirement, which is the annuity company, AuguStar Life, which is the life insurance company. The life company markets index life, term, and bank-owned life insurance through builder general agencies, PPGAs, and IMOs, and a Latin America operation that is extremely successful, offering group and credit life products in Chile, Peru, and Brazil. And the fourth business company under Constellation is an M&A reinsurance services company. And all four of the Constellation companies that are under the umbrella are very well diversified and present great opportunities to scale as we grow organically and inorganically. So let's take a look at the financial strength. You'll see that our balance sheet is one of strength, 2.69 billion in adjusted statutory net worth, 1.93 billion in adjusted capital, 34.7 billion assets under management, and 2.5 total GAAP equity. And our ratings are strong: AM Best A, Fitch A-, and Moody's Baa1. Very proud of the foundation that we have as a company, and our balance sheet has never been stronger as we forge towards the future to grow in many ways. So I'd like to introduce you to our flagship product, which is the Virtus Index Universal Life. And this is our new top tier product offering in the brokerage channel. And when you think of AuguStar Life, you should need to think of having a product that is focused on accumulation, balanced with protection, and lower expenses. And illustrating responsibly with IUL is something that we took very seriously. And when AG 49B regulation went into effect, the AuguStar Virtus IUL product began to get a lot of attention in the marketplace. And since 80% of index UL is written in the brokerage channel, we are very excited to be able to offer you, with your contract with IAMS, a highly competitive accumulation product to take a look at and consider for your clients. We believe our products stand out because we don't play the games with illustrated rates, and our balanced approach between protection and lower expenses shows up front and center when you look at us compared to other carrier offerings. So let's do that. So a low cost, low expense IUL carrier can mean a lot to your clients for their bottom line, especially if they're using that for a vehicle for retirement. There is more money going towards death benefit and more money going towards the cash value growth. And on this slide, we're going to spend a little time on this because this is a great example showing just how high expenses are getting. So let's take a look. One way is to measure by looking at expenses as a percentage of premium. So here we have a male age 45 preferred best non-smoker paying for 20 years, $25,000 a year. And we solve for minimum non-MEC death benefit. Option B, switching to A in policy year 21. And this is very current data from Life Trends, and WinFlex from September of 2023. So you'll see in the first column that of the 250,000 of premium collected over the 10 years, there's significant amounts that are going straight to expenses. So for example, take a look at Pac Life, whose expenses are $125,190 and represents 50% of the premium goes toward expenses. And those that are around AuguStar Life at 17% of the premium going towards expenses. Some of the other low expense, low premium carriers are Mutual of Omaha and North American. And then when you take a look at 20 years down the road, when the client has put in 500,000, again, 25,000 for 20 years, you can see how high the fees and expenses continue to grow with some of the carriers on this chart as a percentage of premium collected. John Hancock at 215, 823, which is 43% goes towards expensive. And again, Pac Life at 260, 456 with over 50% of expenses as a percentage of premium. So the next time that you take a look at an illustration for your client, whether you have IAMs run the illustration for you, whether you use WinFlex, whether you use iPipeline, and we'll talk about that in a little bit. Take a look at AuguStar Life for your client to see exactly for yourself how we stack up. Carl's going to take you through the remainder of the slides to show you where we compete and where we win.
Yeah, so you can see here, this is a slide that was updated for this month. We have a cap that went from 10.5% to 11% effective with this month's sweep date and hit our illustration software at the beginning of the month. This is a pretty straightforward solution. We've got a client putting money in and then going from B to A and then taking money back out. We have a competitive cap and interest rate, and the maximum distribution number is very strong. In fact, in this particular example, it happens to be number 2. And the contract that we're talking about today, the Virtus IUL2, is absolutely an accumulation-based contract. That's what it's designed to do. As Therese was suggesting, we have reasonably low expenses in comparison to the rest of the industry, and that's built on a firm belief that the less money we're taking out, the more money stays there for your client. One of the things that we do in the home office quite a bit is we like to run maximum illustrated rates because we see a lot of requests for that. I also happen to run quite often lower rates because I know the interest rates today are high, and we're just coming out of a very long period of low interest rates, and so it's also beneficial to look at lower interest rates. The advantage of lower expenses, in my opinion, is twofold. One, when the markets are up and things are doing well, you're taking less money out, which leaves more money to grow. But I think even more importantly is we all know that we have periods of time when the markets go down. In fact, we just recently went through a period where I'm sure for all of you, a number of your clients had segments that were coming due with a 0% crediting rate on the investment side. And that's a struggle because you are still going to have COIs come out. You're still going to have any other admin fees come out. And the advantage of having a lower expense product at that point in time is more apparent, because while your client will possibly see less cash value at the end of the year than they started with, because they got that 0% net investment, if you take less out, then there's more to grow later on. And I think that's an important part of indexing that oftentimes we miss in the illustrations because we're always showing up years. I think it's important to realize that down years occur, and when they do, it's important to have lower expenses in order to be able to take advantage of the next positive year. If you have policies that are taking out larger chunks, then it becomes more difficult to see those positive years. So as an accumulation product, it functions pretty well. I generally will see this run at about ages 40 to about age 60 very effectively versus the rest of the industry. I think once you get above age 60, you don't see a lot of demand for an indexed product that's accumulating assets. You do see it below age 40, and we are effective there, although the bulk of the agents that we've talked to over the last several years, they're focused in a little bit higher age group because there's more disposable income. So I'm going to imagine that for those of you on the call, you're probably in the same boat where once you see folks at age 40 and above, there's a little more disposable income. They switch from a term-based approach to a product that might be able to help them on a permanent basis where the premiums are a bit higher. Next slide, please. So in this particular example, we've got our 45-year-old, 6.7% again. So now we're going down 10 years from the last slide, and we're pulling money out again for 20 years once we hit age 65. And you can see where we stand versus a number of our competitors. Similar group to what we had before, but not all of the carriers in both slides. But at the Virtus IUL2 contract here has a maximum distribution in this particular example of $84,629, handily beating really most of our other competitors out there. The next nearest one, Symetra, is at $76,789. One of the things that I like about slides like this is not that there's a lot of numbers, except numbers do help tell a story. You might find a carrier that suddenly looks like they have really strong distributions, but they don't have very good cash surrender values, right? Normally your distribution, unless you're playing some games with your illustration, should be based upon having good cash surrender values within the contract by the time you start taking distributions and thereafter. And if you look at the cash surrender value at age 65, We've got a $946,000 amount. The next closest competitor is at $919,000, which happens to be Symetra. So it makes sense that we're going to have a higher distribution, right? If you're going to have more cash surrender value, you should have a higher distribution. If we had something like 850,000 or 875 and we were competing against Symetra and we're showing up that big of a gap, I think you'd be left scratching your head. So as a product, it does very good basic blocking and tackling, making sure that there's good crediting rates, making sure that there's low expenses, making sure that the cash value actually shows up in the policy as we credit year after year after year. And that cash surrender value at age 65, I think, helps highlight that. If we were to look at values as we go out into age 75 and age 85, you'd see similar stories as well, where the cash is actually there, which is what supports that higher distribution. Occasionally you find products out there where they've got non-guaranteed bonuses based upon having some sort of a loan rate or something along those lines. Not something that we do. Therese talked about responsible illustrations. We do have a bonus in our product. It's 30 basis points after year 11, or after year 10 rather, but it's guaranteed irrespective of whether the index goes up or down or sideways. And so if we have something like that, it's guaranteed within the contract itself. I think when I look at competitive sweet spots, there's a couple of different places. As I mentioned, this is an accumulation and distribution product, but I think some of the places where we can shine against some of our competitors is in higher funding patterns. In the industry, one of the things you sometimes see with some products is in that first year, you have a very high premium load and then lower premium loads in ensuing years. So as an example, there might be a carrier out there that says, oh, we're going to have a premium load of 10% in year 1 and then 4% for the next 9 years, in years 2 through 10. And if you look at us, maybe we have a 6% load in years 1 through 10 or something along those lines. The advantage of having that lower first year is if you get a 1035 exchange or you have these high funding patterns, it might be a 5 and a 7 pay, the client winds up paying a price with those higher front end loads early on, that because those first year dollars are the most important ones. They're the ones that get credited more than any other dollar over the years because they're in the policy for longer. And so not having that high first year charge can make the contract look very attractive. I've run a number of scenarios where we were doing short pays, a number of scenarios where we're doing 1035 exchanges, and in those scenarios, depending on the carrier and how they've structured their loads and their fees, we can look very, very competitive versus some other carriers out there. Another place where we've seen a lot of success in sales is those folks who do want cash flow. That is a big part of what they're looking for, but they also are interested in substantive death benefit, right? Normally, when we build a product for maximum cash flow, you start off with a type B death benefit and switch to a type A when you stop funding. And in a structure like that, you're going to wind up with less first year death benefit and lower death benefit typically throughout than if you just run everything at a type A death benefit. If you run it at a type A death benefit and fund at the same level, you'll have a higher initial death benefit when it matters most, typically when people have financial responsibilities like kids in their household, and that max death benefit can come in handy if the worst happens, and it does protect their family and does the job it's supposed to. Do you give up a little in cash flow? You do. You know, most carriers, if you look at their illustrations, you'll give up somewhere between, I don't know, 6 to 15% in the annual cash flow in later years. So there's a cost to having the higher death benefit. But for folks for whom the death benefit is important and the cash flow is important, it can be a really effective solution. And I think our product stands up very well in that particular case because we have very competitive COIs throughout the policy life cycle. I want to mention a product that you probably haven't seen from any other carriers. We have an indexed whole life pay. It's a 10 pay contract. We're going to be rolling out a 20 pay contract at the beginning of January. And it is unique in the industry. There are some single pay whole life, indexed whole life products out there, but to my knowledge, there's no other multi-pay product. There are some carriers, I know when we rolled it out, we had some folks say, oh, well, Guardian's got something like that. They don't. What they have is a dividend function that allows you to index. But if you write whole life insurance, and if you write 10-pay contracts, and the most competitive 10-pay contract in the industry today is Mass Mutual's, and then after that, probably Penn, and then New York Life. And if you compare what we can do with our 10-pay contract on a cash flow basis with those companies, I think you'll be pleasantly surprised. We're typically going to be 10 to 20% higher in cash flow than they are. And at the same time, we offer the same guarantees that you get from most whole life products, right? We guarantee that the premium will not change. We guarantee that if the premium is paid, you'll get the death benefit. And we guarantee that the cash value, the guaranteed cash, is going to endow at age 100 for the death benefit. But what we do with the policy is we, instead of having a function of guaranteed cash and participating dividends, we've instead taken the concept of an indexed universal life policy and how that functions from a cash value perspective and we'll plop that on top of the whole life contract. And so now you've got a product where that whole life contract has those guarantees, but the cash value flows into an indexed account. The premiums flow into the indexed account, creating cash value. Those indexed accounts get credited with the interest rates and the caps that they earn, and that generates cash value for the future. And then on the back side, they have that combination of either an indexed loan or a wash loan, which you generally don't see in whole life, either of those, that gives them the opportunity to take loans that make the most sense for them. And the product is very competitive in the industry for cash flow and for internal rate of return on the cash value. In fact, I haven't run a scenario yet where we haven't had a better solution than another 10-pay whole life contract out there in the industry today. Next slide, please. Another feature that I'd like to mention is our accelerated benefit rider. This is our chronic and terminal illness benefit rider. And the reason I want to mention it is we are pretty generous with it. It's a slightly different rider than what you see with most other carriers. We have a maximum lifetime benefit of $5 million. Most of the maximum benefits I see from carriers are either in the $1 million to $2 million range. Most of your clients aren't going to have a $5 million benefit because they're not going to have a large enough policy. I understand that aspect of it, but it is an advantage to have when you are dealing with some folks who are buying larger policies, and that maximum lifetime benefit is significantly more. Like other types of riders, we have no charge while the policy is just carrying this. The charge comes when they take the benefit, and we establish a lien against the future death benefit payable. They can take the benefit on a chronic illness basis when they have 2 out of 6 ADLs they can't perform, or they have cognitive impairment where there's significant danger to themselves or others. Pretty standard stuff. And the benefit gets larger the older the client happens to be. It's a dollar for dollar benefit. So if your client says, I want $150,000, we reduce the death benefit by $150,000 and they get $150,000. So most carriers where we differ, they tend to do it on a discounted basis. On this particular rider, we don't discount the death benefit. We just give you that death benefit and you get it and you can spend it however you want. And we set up that lien against the future death benefit payable. Pretty straightforward in that regard, as there's no annual charge, but we do have a small one-time admin charge when you take that first claim. Next slide, please. We have, I think, a very strong fluidless underwriting program. The issue ages go up to 45 currently. We've been discussing with our reinsurers whether or not we want to move that up to age 50, and a maximum face amount of $2 million. The numbers that you see here are accurate and what we're hoping to get when we put this in place. 79% of the policies that come into our fluidless underwriting program are issued without a paramed or an APS, so they go through pretty effectively. And let's be clear that the goal of any fluidless underwriting program should be to get the healthiest insured's policies as quickly as possible with as little interference in their lives as we can have. The rate classes that we issue are about half super preferred, and then another 20% of those are preferred rate class, then select, and then standard or other. So almost right at 70% are coming out in our top 2 rate classes. And again, if you think about the goal of a fluidless program, which is to get your healthiest insureds issued quickly and with as little fuss as possible, it makes sense that you have a very high percentage in those top 2 rate classes, because those are the folks that you want to get out. And nearly half of our policies are issued in 5 business days or less when they go through this program. So it's pretty quick on top of everything else. It's a fluidless program. We do have a 5% kickback that goes into full underwriting, and that's simply to check to make sure that we're happy with the results that we're getting and they meet what we expect to see. We do have, underwriters have the option to push somebody into full underwriting if they think that that's warranted. But in general, the great majority of folks, as you can see in the very first pie chart, go through without having either a paramed or an APS. Also, we don't do a personal history interview We find that with the phone calls tend to be invasive. Not every client wants to have somebody on the other side of a phone asking them questions about how much money they earn and things like that. That tends to be personal issues that some folks are uncomfortable giving information to strangers on. And it can oftentimes be a holdup because most of us operate today without landlines, right? And so we get a phone call on our cell phone, and the first thing we do is look at that phone number, try and determine if that makes sense. You know, do I want to answer this call? And if it's a phone number I don't know, maybe I'm not going to answer it. And so that personal history interview can sometimes become an impediment to getting policies issued. And so we don't do a PHI. We didn't find that made much difference to our underwriting decisions anyhow. So that's another advantage of working with our fluidless underwriting program, no PHI. And again, I think the data speaks for itself. We get a lot of policies issued in those top 2 rate classes. They get issued quickly, and they get issued without the interference of having a paramed, because it is built as a good fluidless program. Just want to mention, we do have WinFlex illustrations up and running. We have a dedicated life insurance brokerage sales desk. SureLC is up and running for our contracting purposes. We have some big days coming up for us. We are doing business through Firelight currently. We have been working with iPipeline to get our policies on there for their e-application purposes, and that's set up for November 6th. That is our goal to hit for iPipeline and have that out. We are currently testing with Ensight to get our illustrations up on Ensight as well. So we've got some new technology coming up that we're very excited about. And we would love to be doing business with you through any and all of those programs, whether you're using Firelight or in the future iPipeline with us. And speaking to our life brokerage sales desk, all of those folks are ready to help you out and are focused on working with that brokerage space because they know that that's an important area for us to grow. As Therese said earlier, you know, we are supposed to grow organically and inorganically. Organically is what we're talking about today, growing by having producers decide that they like to do business with us, that we're easy to do business with, and that they can get their policies issued accurately and quickly, and that those are competitive policies. And I hope that we've been able to present that information today in a way that makes you go, yeah, I think that these are good policies. And with that, I'd just like to say thank you. We really appreciate the time that you've given us today. I know that means you're not out there talking to clients and prospects. If there are any questions, we are happy to take them now.
All right. Thank you, guys. And just wanted to launch another a poll for everyone real quick before we're getting off. And it does look like there are a few questions out there.
Can when you get a chance, can you read them to us, Paul?
Yeah, absolutely. And can everybody see my screen, or is it blank?
I can see it.
Okay, perfect. Just one question out there. So it asks, so age limits for UL, is it 18 to 45? And that comes from Tony.
For the fluidless underwriting program, it's 18 to 45. The product goes up much older than that. The official issue age limits are up to age 80. I will say that ever since COVID, our reinsurance partners have been reluctant to support policies over age 75. So generally speaking, I encourage people to look at younger than age 75 for their clients, at least as far as we're concerned today. But the fluidless underwriting program is currently 18 to 45 and up to $2 million of face amount. But full underwriting can take place at much older ages.
Nice. And last question here, it comes from Olga Jones. It asks, could the presentation be emailed out? And that's something I can reach out to her about, and that kind of leads me up to my last poll here. If anybody would like a follow-up call about more information on AuguStar. And another question's coming in from Mr. Joe. It says, can you elaborate on the teacher's pension fund role?
Therese, you want that, or you want me to take that?
What specifically, can he be more specific? I'm happy to re-communicate who they are, but they're the two largest pension funds in Canada, and they are 100% backing the parent company of AuguStar, which is Constellation. So they've got deep pockets, and I believe you can Google the names. It's kind of there's a couple foreign names. We can get that emailed out to you, and I can give IAM some detailed information on the parent company. But if there's a specific question regarding Constellation, I'd ask that you just type it in for Paul to ask us.
Yeah, and I would just say that they are 50-50 owners of more than 98% of Constellation, our parent company. So like a number of other carriers out there, domestic carriers like Transamerica, Standard, Protective, they all have owners who are other than their carriers. Same deal here. So they funded Constellation, which is insurance, which in Constellation wound up purchasing us, and they're our parent. So they're the two big owners. I mean, if that's the question. And the one thing I'd say about having them as big owners that's nice is pension funds tend to be very patient in the way they approach their investments, which is what we are. And their goal is for us they just go ahead and grow the business over time. That's what we're looking for you to do. We're not looking for any fast returns or anything else. We want you to be smart, and we want you to be sensible about how you grow the business, and we'll see the profits come in as they come in. So it's been very nice working with them.
All right, that does seem like that was the last question that had been typed in. Once again, if anybody would like any additional information on this, or they have additional questions, please reach out to me, 1-800-255-5055, or more than welcome to email me. It's paul@imsinc.com. Once again, that's paul@imsinc.com. Well, guys, I really appreciate your time today and going through AuguStar and giving us all this great information. Therese, Carl, once again, I really appreciate it.
Thank you. Thanks so much to IAMS and Curtis and the whole Life team for having us on. And if there's any other questions, please don't hesitate to reach out to IAMS and Carl and back to you. So thanks everybody for being on the call today. We appreciate it.
Yep. Thank y'all. Y'all have a great day.